You ever see a really audacious move in the business world and just think, wow, that took guts?
Definitely.
Michael Saylor's MicroStrategy, betting so heavily on Bitcoin, that definitely fits the bill.
hmm
It kind of makes you wonder if other big players ever, considered taking such a leap.
Well, that's exactly the intriguing territory we're exploring today. We've got a recent Bloomberg report. It gives us a bit of a peek inside Coinbase.
Oh, okay. The big exchange.
Right. And their internal discussions around whether to adopt a similar, Bitcoin-focused treasury strategy. We'll also look at their current crypto holdings and a pretty significant recent acquisition to add some context.
Gotcha. So our mission for this deep dive is sort of to understand why Coinbase, they're right at the heart of the crypto world, why they might have decided against going all in on Bitcoin like Saylor did.
Yeah, what were the calculations there?
What were the key strategic thoughts? And, what can we learn about managing risk and staying ahead in this whole fast-moving crypto landscape? We're kind of after that aha moment, understanding why the seemingly obvious path wasn't the one they took.
Makes sense.
All right, let's dive in. Did Coinbase actually, seriously entertain this idea of a massive Bitcoin investment?
Oh, absolutely. Yeah. According to the Bloomberg reporting, this wasn't just some fleeting thought. Coinbase apparently considered a Bitcoin investment strategy, similar to Michael Saylor's, on multiple occasions, pretty much since they started back in 2012.
Wow, since 2012.
Yeah. So this was like a recurring theme in their internal strategic talks over, well, a long time.
Over a decade, then. That really suggests it was a pretty serious consideration. And Brian Armstrong, the CEO, he actually spoke about this publicly.
He did, yeah. In that Bloomberg interview, he confirmed these internal chats spanning those 12 years. He even touched on the scale of what they were thinking about the idea of putting a really substantial portion of their balance sheet, I think he mentioned around 80%, into Bitcoin.
80%, whoa.
Yeah. That's a monumental shift in corporate treasury strategy if they'd actually gone that route.
80% is. That's not just a small slice. That's fundamentally changing their whole financial setup.
Yeah.
So, okay, they thought about it really deeply. What stopped them? What were the main worries?
Well, the chief concern, as Brian Armstrong put it, it really centered on risk management.
Okay.
He specifically highlighted the potential hit to Coinbase's cash reserves. The underlying worry was, making such a large bet on a volatile asset like Bitcoin.
Yeah.
It could potentially jeopardize their operational stability.
Right, the survival of the exchange itself.
Exactly. The survival of the exchange itself. He framed it as a conscious choice about risk, which really underscores how heavy that decision was for a company like them.
Yeah, that makes sense.
It highlights this key tension, right, for crypto platforms. Balancing potential gains from holding crypto versus the basic responsibility of keeping customer assets safe. It suggests they lean towards a more conservative, infrastructure-first approach rather than big asset speculation.
That makes perfect sense. You can't be a reliable platform if your own financial ground is shaky. And there was another angle mentioned too, wasn't there? Something about not wanting to look like they were competing with their own users.
Precisely. Yeah, the CFO, Alicia Haas, she raised a really critical point about market perception. They were worried about being seen as directly competing with their own customers when it came to how cryptos performed. Imagine if Coinbase held a ton of some specific crypto, users might start wondering, are there decisions about listing assets or promoting them influenced by their own bags?
Right, rather than just market demand or tech merit.
Exactly, and that could seriously erode user trust, which for an exchange is just paramount.
That's a really sharp point about maintaining neutrality and trust. Okay, so they opted out of the big Saylor-style bet. But they do hold Bitcoin, right? They haven't just avoided it completely.
That's correct, yeah. The data we have from bitcointreasuries.net, it shows Coinbase currently holds a pretty significant amount of Bitcoin. 9,480 coins.
9,480, okay.
Which at current market prices is roughly $988 million.
Almost $1 billion. Okay. So that's still a substantial holding in its own right.
Definitely.
And I gather Bitcoin makes up most of their total crypto assets.
Exactly right. That $988 million in Bitcoin, that's the lion's share of their overall crypto holdings, which total about $1.3 billion. So yeah, while they didn't go for that dramatic, balance sheet overhaul, Bitcoin clearly plays a pretty significant role in their treasury strategy.
Okay. Now, how does that stack up against other corporations holding Bitcoin? Where does Coinbase rank? Are they a big fish in that pond?
They're a notable holder, yeah. Currently ranked as the 9th largest corporate Bitcoin holder, based on that data.
Ninth? Okay.
Just for context, they hold less than companies like, obviously, MicroStrategy, the mining firm MRA Holdings, and Tesla.
Right. The big names.
Yeah. So they're an insignificant company, even if their strategy is different from some of the, let's say, more aggressive accumulators at the very top of that list.
Okay, so they're holding a decent chunk, and it sounds like they're still actively adding to it, even if it's not that, 80% of the balance sheet idea.
That's right. Coinbase reported buying an additional $153 million in crypto assets just in the first quarter.
Oh, recently then.
Yeah, and as Elijah Haas pointed out, Bitcoin was the main focus of those purchases. So it suggests more of a maybe measured, ongoing accumulation strategy,
Right.
rather than a huge one-off shift in how they allocate their treasury.
Sounds like a deliberate, maybe more strategic buildup over time. Now, the Bloomberg report also mentioned something else pretty big for Coinbase and acquisition. Something about crypto derivatives.
Yes, this is a really, really significant development. Coinbase recently agreed to acquire the crypto derivatives platform Deribit.
Deribit, okay.
And the price tag is substantial, $2.9 billion.
Wow, $2.9 billion. That's a massive investment. What's the thinking behind a move that bold?
Well, the main strategic reason seems to be to dramatically expand Coinbase's footprint in the crypto derivatives market.
Okay.
Their existing presence there was, frankly, pretty small, mostly through a platform they run out of Bermuda. Acquiring Deribit gives them instant scale, a well-established platform, and access to a much bigger, more mature market for these, more complex financial instruments.
And Deribit must be a powerhouse itself to command that kind of price. What sort of volume are we talking about?
Oh, yeah. Deribit is definitely a dominant force in crypto derivatives.
Right.
Just in 2024, they handled over $1 trillion in trading volume.
$1 trillion.
Yep. And they currently have around $30 billion in open interest. That's a total value of all the outstanding contracts. So, yeah, those numbers really show how significant they are in this space.
So Coinbase is basically making this huge bet on the future growth of crypto derivatives by snapping up the market leader. Didn't they say something like this makes them the global leader?
That's the phrase they used, yeah. They released a statement positioning this deal as establishing them as the global leader in crypto derivatives trading. It's a pretty clear sign of their ambition to, diversify where their money comes from beyond just spot trading fees and really capitalize on the growing demand for these more sophisticated crypto products.
Interesting.
It is fascinating, isn't it, how they decided against the massive direct Bitcoin investment, partly due to risk, but then they're willing to make this multi-billion-dollar bet on the derivatives market.
Yeah, that's a great point.
It really shows that risk isn't always seen the same way across different parts of the market,
Absolutely. It really highlights how companies weigh up and approach different kinds of risk within this whole crypto world. Now, stepping back a bit, Coinbase wasn't the only one noticing Michael Saylor's approach. The report mentioned a wider trend of other companies sort of copying that playbook, right?
It does, yeah. The report points out that several other companies have indeed started following a similar path to Saylor's MicroStrategy. They fund their Bitcoin buys by issuing stock and debt.
Right.
The basic idea for these companies is that, they hope the potential rise in Bitcoin's price will ultimately boost their own share value. It's become a sort of recognizable strategy, though, still somewhat debated for some public companies.
I guess they saw the effect on MicroStrategy stock early on?
Probably. That
Yeah.
likely encouraged others to at least consider similar strategies, yeah.
And it sounds like this broader adoption of Bitcoin by corporations is maybe more widespread than a lot of people realize.
Definitely. The numbers are quite revealing, actually. Over 100 publicly traded companies around the world have now reported holding Bitcoin on their balance sheets.
100 public companies.
Wow. Yeah. And beyond that, you've also got 40 issuers of Bitcoin ETFs, 26 private firms, and even 12 nation-states that have disclosed Bitcoin holdings.
Cool countries.
So, yeah. While Coinbase might have chosen a different route for its main treasury, this wider trend of institutional Bitcoin adoption, it's clearly happening.
Okay, let's try and pull this together. So Coinbase seriously thought about a huge MicroStrategy-style Bitcoin investment. But in the end, they prioritized keeping their cash reserves stable and, importantly, avoiding that perceived conflict of interest with your users.
Right. Trust was key.
But while they do hold a fair bit of Bitcoin, almost $1 billion worth, and they keep adding to it, their really big strategic play recently has been this massive $2.9 billion acquisition of Deribit.
Yeah, shifting focus to derivatives leadership.
Positioning themselves as a leader there. It
Yeah.
seems like a calculated strategy, focusing more on building out market infrastructure rather than just piling up Bitcoin on their own books.
Exactly. I think this deep dive into Coinbase's thinking really shows the complex risk-reward math that these major crypto players are constantly doing. There's this, ongoing tension between the potentially huge returns from holding assets like Bitcoin directly and the basic needs of staying financially stable, having strong cash flow, and crucially, keeping customer trust.
Right.
Coinbase seems to be prioritizing those latter points in their core strategy while still, engaging heavily with the crypto world through these big strategic investments and acquisitions.
So here's maybe a final thought to chew on. Given Coinbase made this deliberate choice not to go all in on Bitcoin directly, citing risk and competition concerns, but then made this incredibly aggressive $2.9 billion move into the derivatives market, what does that really signal about their long-term vision, for their business and just the way crypto companies are evolving?
Yeah, what does that say about the kinds of risk?
Exactly. What different kinds of risk are they ultimately more comfortable taking on, and what could that mean for the future shape of, crypto finance?